A bit of a rebound on the local markets, as I mentioned, and I spoke earlier to Marcus Padley from Patersons Securities. Marcus Padley, those gains look pretty widespread. Any highlights?
No, really across the board in the majors, Tiki. Uranium stocks had a particularly good day today. But apart from that, the feature perhaps would probably be low volume in the US and probably here as well. We've also seen no real market lift after the Greek swap deal, and we're waiting to hear probably tomorrow the Greek bailout deal being approved, but no real market lift from that, which means people are still nervous. And I think as far as the money parked on the sidelines, be it in term deposits or something else, I don't think it's coming out. And particularly with the RBA leaving interest rates on hold, you might just find a few people thinking rates are going to go down further, so they're going to roll their term deposits now. So the market's still hesitating in this sort of 42 to 4,400 on the ASX 200. Today's a good day, but it doesn't really feel like we've got any great momentum.
I see also the Australian dollar looks to have a pretty softish feel to it at the moment. What's that done to Australia's big offshore earners?
Well, I did have a look at this ahead of that question, Tiki, and the Aussie dollar peaked on the 29th of February, just a few days ago, and really there hasn't been a big movement. And I've also looked at it since October last year when it really started to take off again. And the correlation between what are known to be currency-affected stocks and the Aussie dollar is really so stock-specific you can't generalise. And I think it's the same today. If you look at the traditional currency stocks, they're not really showing a great correlation with each other. I think the bottom line is the Aussie dollar is not a big stock driver at the moment.
Insurer QBE is one company with big offshore earnings, but a 5% gain on the share price. There must be something else going on there, isn't there?
No one can find a specific reason. I did notice after hours on Friday, the National Bank turned up with a substantial shareholding, but don't get too excited about that. I think it's just in their funds management group, and they probably go above and below quite often. But they've also had a capital raising, a set of results, but I think the major thing is a change of management. Frank O'Halloran disappearing after 14 years. New MD coming in. I think the institutions quite like that because it hasn't done very well recently. And, you know, there's talk about short covering and stuff. The yield's almost 8%, PE of 10. The market's all about buying specific stocks. This seems to be one that's being targeted.
Nice for those shareholders anyway. But how has Macquarie Group fared after a ratings downgrade from Fitch?
Well, they did the same as the major banks did when they were downgraded. It's gone up. They were on review anyway. This is just confirming what everyone expected. Fitch have gone through all the global financial institutions and done the same thing. It only matches the S&P rating. It's not a Macquarie-specific thing. It's more an industry-wide thing, so no big deal for Macquarie.
Marcus Padley, thanks again for joining us.
My pleasure, Tiki.